Colleagues, I want to fund education. I have a bill with Representative Helt and Senator Knope to fund QEM, another to prioritize funding for education first in the budget process. I supported my local bond, or school bond, and even contributed to their campaign last year, and I voted yes on Measure 98. But I feel this tax package will fund unpaid liabilities, and it will not go to schools, and it will hurt our low-income families and fixed-income seniors. Taxes for an economy should be efficient, equitable, be revenue generators, and be simple to understand. Gross receipt tax are not efficient, and they are not equitable. Gross receipt tax is viewed as a bad tax primarily because of tax pyramiding. Pyramiding occurs when products and services are taxed each time they purchased and sold by subsequent firms during the production process. Now let's look at this at point of view from housing. We all want affordable housing in our districts, and we all have a housing crisis. And Oregonians feel this, and they know this personally. There are many products that go into building a house. Wood for the framing will now be taxed at harvesting, transporting, processing, treating, delivering to retail, then at retail, again for installation of the labor to build a house, and then again at the sale of the house. That's 9 times. At a 0.57 tax rate, that equals out to 5.13% additional price to an already unaffordable house. This is a similar process for the transactions to build other components of the house like roof shingles, sheetrocks for the walls, nails, concrete, foundation, driveway flooring, electrical wiring, light fixtures, kitchen counters, plumbing, toilets, the list goes on and on. Also, at the top of all that cost, you also have to purchase the land, subdivide it, and excavate it, so there will be taxes on that as well. So a 5 to 6% pyramiding tax just made building a house much more unaffordable. A $300,000 house in Redmond, Eugene, Beaverton, Portland, Salem, you name it, just went up to $318,000 like that. With the gross receipts tax, Oregon will now tax utility costs as well, creating a higher bill to live in a more expensive house. But housing is not alone in this type of climbing tax. Many small businesses have small margins but have high cost in products. Restaurants, clothing, bike shop, landscaping, automotive dealerships, restoration, and manufacturing, and there are many more. The small business that doesn't meet the $1 million threshold will still be affected by the products that they purchase from other sources that are still taxed. Their costs just went up. Central Oregon's economy is based on a small mom-and-pop shop. We have one of the highest entrepreneur business startups in the nation. Many working-class families depend on their small business for their family's livelihood. Testimony was submitted in OLIS that businesses with small margins will have to move to another state. And I have one in Redmond, and he submitted testimony, and he expressed that he's already looking in Texas and Wyoming. Lost jobs, lost incomes for our families. House Bill 3427 favors big business that do most of their sales outside of the state. The author, this bill has carved out the interest of big business at the detriment of small working mom and pop businesses like the ones that we have in Central Oregon and in all of our districts.